Hello, friends. Welcome to our weekly podcast. Today with us, we have Mr. Ajit Kabi, who is a fundamental analyst at LKP Securities and oversees the BFSI sector. What's your interpretation on HDFC Bank's this quarter results?
Hi Karthik, thanks for having me here. So, about the question of the fourth quarter result of HDFC Bank. So, we believe the fourth quarter result of HDFC Bank was a mixed sort of performance. The asset quality of the bank was holding up very well. The gross NPA ratio have declined to 1.12% versus 1.32% in previous quarter. We have seen in last 5 to 6 years the historical gross NPA of around 1.3%, where the current GNPA is 1.12%. So we believe the asset quality front, the bank is doing very good. The slippages numbers are moderated and the upgrades and recoveries are also happening very well. So asset quality is not a concern, and the restructured pool is also going down. Now it carries around 31 bips of the entire loan book. So we believe the asset quality concerns are way behind. And what we have seen in this particular quarter, the impact on income statement was little significant. The impact of income statement was mainly the PPOP degrowth happened sequentially. It was mainly because of mainly because of the OPEX expenditure was quite elevated, and the NII growth was little lackluster. You can say it grew marginally sequentially, and the OPEX was very high. The cost to income ratio was above 40%, where the historical cost to income ratio of the bank was below 40%. We have seen in previous quarter it was around 39%. So elevated cost and a slower NII growth has resulted in a PPOP decline. In terms of balance sheet, you can say that advance growth was quite normal. It was around 16.6% YOY. The deposit traction was very good. It was around 20% because of lot of branch additions, and in this quarter the bank has added 648 net branches. So overall we can see in terms of asset quality, in terms of growth, the bank has did very good. But in terms of profitability, the PPOP declined was we have seen because of the margin issues and the rate hikes.
What do you think about the asset quality pressure going forward?
So, about the asset quality pressure going forward, the bank management has also alluded the asset quality concerns are not too much. The restructuring book is declining. The ECLGS book contributions, they are performing very well. The NPA formation is very low. So from going forward, we don't see a major asset quality hiccups from the wholesale book. But in retail books, there are a lot of layoffs happening, and the high margin situation, we can see we may predict little hiccups, a small hiccup in retail assets, but bank is quite adequate, have quite adequate provisions. So we don't see a major hiccup in net NPA ratio. Yeah, it might be that we can see the GNPA ratio can move a bit, but the NNPA ratio will be intact, and it will lead to a lower credit cost in coming quarters.
What are your expectations on the upcoming results?
Yes, the upcoming result of other banks, excluding HDFC, because HDFC has declared its result, and the other banks we can see the ICICI, Axis Bank, IndusInd, as well as Federal and Kotak Mahindra Bank. We may see the margin pressures will be there. That is true, and the cost CDR, the credit deposit ratio, is likely to stay elevated for all the banks because the deposit growth was lackluster in the entire system, and then credit growth was average. So we believe the margin pressure will be there. In coming quarters, we have to check the commentary around how the FY24 is going to be, and the second thing, how the credit cost is going to behave in fourth quarter. So these things are key monitorable in this result season. So we believe that we hope that all the banks would perform well, but we can see the margin pressure to going forward, and because the deposit growth is, the bank has to mobilize their deposit very well to maintain the credit deposit ratio of at the current level. So let's see, we have to be very cautious on the for FY24, and we have to deep dive into the management commentary very well. Hopefully ICICI Bank and Federal Bank are going to perform well in this quarter. Thank you.
Thank you, Ajit.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing. The securities quoted are exemplary and are not recommended.